It has been a roller coaster ride on Wall Street this week, from a massive downturn last Friday to big gains again by midweek. It can add anxiety to even the most seasoned investor. Well, here to help us understand the uncertainty is financial advisor and planner Esther Holt from Star Financial Services. Ooh, Esther, we are glad you are here.
Oh, we are, Esther.
I am glad to be here.
So I know, all right, rough weeks like this we hear described as market corrections. Just
Correct.
explain to us, what is a correction?
A market correction is a downturn in the markets. It happens almost every year. It's generally short term, and it's nothing to really fear.
Okay, so that actually makes everyone feel, I think, a little calmer, just to know that this is part of a cycle.
Correct.
Is there a normal amount of investor loss in a downturn?
Usually the corrections are between 5 and 15%, although some are a little more, some are a little less. You can see on the chart.
Yeah, you brought us a visual, which I'm glad you're here to help explain.
Yeah.
Yes.
Well, the red dots are the corrections, and you see they happen every single year. And most of the time, by the end of the year, which is the gray bars, you end up higher. So that's what this shows. And it does show that they're between 5 and 15%, some are more. Once you get past 20%, that's usually a bear market, which could last a lot longer.
Okay.
Corrections usually last days, weeks, maybe even months. This year we've had a long correction that we've come out of. Now we're in this one. So it's just a little cranky.
But I think that's a good word for it. But there's a little relief to know that it does happen, you say, somewhat annually. What causes that?
Anything can cause it. It could be that people have made gains. Like this year, we've had a run up for the past few months, so people want to take some money off the table and take their gains. It could be that there's a rumor out there. It could be a news report about something, and people get crazy and they just sell. You never know what's going to trigger a correction.
Okay.
Does it go back up to what you had before?
Usually it goes back up more.
Oh, really?
All
Yes.
right. Well,
It goes up more.
That's good.
how do we know? I mean, I know you can't see into the future, but how do we know that this is just a correction and not maybe the sign of a downward spiral?
Well, unless you can tell the future, as you said, you don't. But normally, if it's a bear market or a crash, like what we had in 2000 and 2008, you see things. You see things in the economy. You see things where companies aren't making money anymore, or you have a bubble somewhere. I'm not seeing any of that, which is why I'm pretty confident, that this is not a big crash or anything. It's just our normal yearly correction. And also, we have a midterm election coming up.
Yes, all right.
So
Tell us about the correlation, but is there a correlation?
Well, what I heard the other day at a conference is that since 1946, after every midterm election, the market has gone up. So this year might be different. I can't tell the future, but chances are we're going to be okay after the election. And before elections, generally, the market gets very, very snarky. And that's what it's doing now. We have a snarky market in my terms.
Okay.
Well, that makes sense.
Yeah.
Yes, yes.
And it does kind of help. It makes me feel like maybe we don't need to be so reactive. So any quick advice for any of us that get stressed out by these corrections? Should we change our investments?
No, you want to invest based on your risk and your goals and what's comfortable to you. And short-term market corrections, you ride out, and just don't look at your statements for a little while if you're going to get freaked out. Don't watch the 6 o'clock news. It's going to be okay. Only like day traders and short-term traders really can time markets and care about that sort of thing. So as long as you're invested correctly, you'll be fine. And as I always say, you should really work with a financial advisor to make sure that you're invested correctly and diversified so that your accounts will come up when everything else comes up after the correction.
Well, that raises an interesting point, because for some of us that might be new to investments, we don't have the scope that an investor and a planner does. So we see something that looks like a downward spiral and think, oh, I've got to change it all. But so your industry, you understand the bigger picture.
Right, and there's been a lot of studies that show that if people don't have a financial advisor, a lot of times they will get it in at the top and out at the bottom, And that's exactly what you don't want to
Yes.
happen. So,
In fact, I would love for it to be the opposite for me personally.
Right.
Thank you, Esther. It is great news. It sounds great news. It makes us
Yes,
all
it
feel a
does.
little calmer. You, of course, can contact Esther and find more financial information at starfinancialsolutions.com. We'll be right back.